Okay, hi everyone. Welcome to the webinar tonight. We have a whole bunch of exciting stuff to share with you tonight, all around as a really quite a cool topic about a special tax webinar with Warren Black. So Warren, thanks for joining us today.
My pleasure.
And we have Andrew here with us as well today.
Hey guys, how are you going? Hi Warren.
And Sherry sends her apologies. She's not able to make it this evening. So thanks everyone for jumping on. Just put in the chat box, let us know if you're here and you can hear us all. If you're excited to be here, that'd be great. Make sure if you've got your notepads and pens out because we're going to be covering quite a lot of content. Okay, so special tax webinar tonight with Warren. We've got Warren on with us tonight and I'll see if I can hand over to you, Warren. See if that's going to work. Are you right for me to swap over to your computer, Warren?
Yep. Not a problem at all.
All right, let's see how this goes. Fingers crossed, everyone. Okay, so...
Can you see my screen?
Not yet. Yep, looks like it's popped over. Can everyone else now see Warren's screen? Yep, awesome. This is a disclaimer. The information provided in this webinar is for educational purposes only and not for individual or financial advice. Any opinions or advice given by Warren Black are his own and not the opinions of the Kids Business Training Program or any other individuals. Cool. All right, Warren.
Excellent.
Thank you so much for joining us tonight. I'll leave it in your capable hands, and if you need anything from us, let us know.
Fantastic, thank you. Well, hi everyone, and very, very pleased to be doing it. It's the first time I've ever done any kind of webinar for kids. I've been teaching my own kids for quite some years and times on things to do with finance and business, but never had the chance to teach it as a group. So looking forward to it and looking forward to kind of showing you a little bit how the world works with taxes, finances and all that, because once you start making money, of course, one of the things you'll quickly find is that there's costs you've got to pay. Some of you who've run market stalls would have already seen that. Like you might make $400 in sales, but then you may have to spend $50 or $20 or $100 in actually buying products and paying for the market stall and things like that. Well, today I'm going to be introducing you to one of the other ones, the not so popular ones, which is called taxes. So just a bit about me. I've basically I've been in business myself now for quite many years now, and once upon a time I used to have a day job, like I worked for somebody else. So even when I was younger, I was very, very keen to actually be in the business, and the opportunity you guys have got here is just mind-blowing. I'm like, wow, just now imagine how different my life would have been if I'd had that, because when I was like 13, 14, I was actually selling chocolates in my local school. Me and a friend, we actually went and he worked at a deli. They gave him all the leftover chocolates which they hadn't sold, and we then went and sold them and made quite a bit of money from it. And I also got the newest video game and used to rent it out. So I got the idea of business pretty quickly, but when I was 15, quite differently to what's happening here for you, my parents gave me a speech about the importance of being secure, being safe, and basically just doing stuff that was, like business was risky, and I pretty much got talked out of doing a business, and then spent like nearly the next something like 16, 17 years in a job, and basically not liking it one little bit. And when I finally stepped out and did my own business, it was scary for me because I was used to having a job. And it's a bit like when you get addicted to, say, lollipops or chocolate. Once you get addicted to chocolate, it's very hard to give it up because you'll know what I mean. Like you get those really nice chocolate or like chocolate cakes or those really nice popcorn or whatever it is that's your favorite treat. And it's very addictive. And likewise, when you get in a job and you're getting a steady paycheck or, money each week, it can be addictive. And not just addictive, but as you'll learn about tax, you're going to pay more taxes as well. So it's fantastic that you guys are doing this. And I've been I've been running a business like for 16 years now. I used to be a lawyer, which means I worked in law. And now what I do is my new business these days is I actually run a lot of webinars just like this, where I teach people more about wealth, about investments, how to, like when you're making a lot of money, how to invest it properly so you can actually make income when you're sleeping and not even working, which is another level. So in other words, let's just say that imagine you having, say, $10,000 in an investment and it's making you $2,000 a year without you even working. That kind of thing, which is of course really nice to be getting money coming into your hands when you're not even doing anything for it, apart from investing. So that's now what I'm doing, as well as helping big businesses and people who've got millions of dollars to structure themselves and go overseas to different countries and pay less tax. Because in Australia, you're living in one of the highest tax-paying countries in the world where governments take lots of your money off you. And there's plenty of countries that don't take lots of your money off you. So I help people find those countries and also teach them about business and education and even about finances and how to manage their finances better and all that. So that's a bit about my background. So I love business. I do a lot of the kind of stuff that, what Ben and Sherry and Andrew are teaching. I love it because the elevator pitch is so important. You need to be able to say in 15 seconds what your business is so people know. And that's kind of what I do with people. I just, say I help people pay a lot less tax and I'll help you grow your wealth. That simple. So I've done events all around the place, just like Ben and Sherry, and this one that some of you are at. I've spoken on international boats through my business, so I was paid to fly over, get on this boat in luxury, travel around to all these places and speak with all these great people. So that's the beauty of a business. You can do things like that. And I've also spoken on stage with these two guys here. Some of you would know Arnie, the Terminator, and that's another guy called Richard Branson, who's a very rich guy as well. So I'm going to tell you a story about tax, probably the best way to get started. So this one here is probably a good one. The fastest way to learn about tax is literally that. So give me your ice cream and I'll eat 30%, or in Australia I'll eat half your ice cream, and you've got no choice. That's kind of what tax is like. But I'm going to tell you a story here. So we're going to, who here knows, I'm sure most of you know these people from Family Guy, but we're going to tell a bit of a humorous story around them. It probably gives you a good idea how tax actually works, and this is how it works. So you've got three kids. You've got Chris, you've got Stuart, and you've got Meg, and they have a dog called Brian. And Stuart, who's 13, starts a business, and he starts making $100 per week, and he's going, oh wow, this is really awesome, and he's so happy. And then Stuart's dad, Peter, says to him, hey dude, you need to give me $20 for running you around. And so Stuart goes, oh, that's fair enough, well, yeah, Dad's running me around and he's paying for different things and paying petrol, like driving my car. So he says, that's fine. But then Peter says, I also want you to give me $40 for your brother, Chris, and your sister, Meg. So Stuart's going, okay, so why is that for? I'm happy to give you $20 and be left with $80. So 100 less 20 is 80. But why do I have to give $40 to my bro and sis? And Peter says, well, it's not really fair that you're making all this money and they don't have anything. So I think it's fair that you give them some of your money. So Stuart will go, well, yeah, but hang on a sec. How can that be? I mean, I've worked for this. I've worked my ass off. I've gone out and done this business. And he's going, yeah, but your brother Chris, who's 15, is depressed. He doesn't have the same drive as you. He hasn't got a job because he's depressed, and he sits at home all day because he's fat and he eats too much and he's not happy. So, shouldn't you feel sorry for him? We should be giving him some money. And then Meg, of course, can't work either. And Stuart's going, that's ridiculous. And Peter says, well, you've got to pay it or you can't run your business anymore. So Stuart gives over $40 and is left with only $40 from all of his hard work. Now, and let's just say Stuart spent $20 on top of that to actually buy his products to sell. So Stuart would have basically made $100 but paid $20 out to buy his stuff, $20 is given to his dad for running him around. Both of those are normal business costs. And then $40 goes to his brother and sister for basically just doing nothing and sitting there. And that's basically kind of how tax works. In other words, the government just takes the money from you, and generally some of it is used legitimately, but a lot of it unfortunately is not. But it's got what we've got to deal with. Now, in principle, tax is meant to be a lot better than what I just told you. Like, it's a way of giving back. So it's a bit like in your family. Like, imagine if you're in your family and like one of you's always doing the dishes, always cooking, always cleaning, always picking up after your siblings, after your brother and sister. I'm sure some of you know what I mean, and after that you're getting really resentful and angry and annoyed about it. So, in my own family, sometimes with my kids, one's doing more than the rest of them, or two of them, and one's not doing anything. And instinctively, the rest of the kids go, hey, this sucks, you need to pull your weight, you need to give back. And then everyone in the family has to pay some contribution. So like at my house on the weekend, for example, when my 4 boys are with me, they all know that, I take them out to Grilled and buy them nice burgers, and we go 10-pin bowling and do fun things. But I expect them to give back to me, like, they help me clean up my kitchen, they do things, and do some jobs around the house for me. And likewise, the idea of tax is we're living in this country, Australia, and look, if you've travelled around the world, you will see it's a fairly good country in terms of sites and services to live in many ways. We've got some nice scenery, nice parks. We don't have to worry about dictators like in some countries running around and just shooting us for the sake of it as much as we do in those. We've got nice roads. We have hospitals you can go to, like public hospitals. So there are some things that are provided for by government which are good. And so the idea behind taxes is that you give back something from the money that you earn for the right to run a business in the country and help out. So that's the basic principle of it in theory. In practice, of course, that's not quite how it works. Most of the money goes for anything but all those nice, pretty stuff I've shown you. A lot of the money goes so Australian leaders can fly around in planes and basically, like in a first-class plane, and then a lot of money is given to a lot of people, for example, who don't have jobs, or people who basically aren't working. So a huge amount of money is just given to people who don't have a job or don't have a business and who perfectly are able to do it. So, and there's also been a lot of money paid over to banks in huge payments on loans. So in simple terms, taxes are used, some of it goes for good things, some of it goes for bad things. And ultimately, a bit like the example I gave you with Stuart and with Chris and with Meg and with Peter, and a bit like Peter said, if you don't give me the money, you can't do business anymore. And it's a bit like that with taxes. If you don't pay the taxes, the tax office and the government can get very nasty about it and can do things like just take money out of your bank account. Like one day your bank account's got, say, $1,000, next day you've only got $600 because the government just turned up and took some money out of it. So that's kind of how the best way to understand taxes. So, and there's also a big kind of way of thinking in this country around taxes as well, that basically everyone should be paying taxes. So, to give you a bit of an idea, Australia has got lots of taxes. Like, there's not even just one tax. We've got like lots and lots of them. Like, the average business owner, someone running a business like you guys are doing, who's earning really big money, can actually end up paying as high as 69% in taxes. So what that means is that if you make $100, $69 could end up being paid in taxes, so you've got $31 left. Now, obviously not on $100. We're talking about if you're making really, big amounts of money, like $500,000 or $400,000, like, for a year or something like that. But there's not a lot of incentive to do that when you've got that amount of tax. And it's one of the reasons why I run my business and help business people like myself and like you pay less taxes so that the government takes less of your money off you. So I'm sure that if you earn, say, $1,000, you wouldn't want to give $690 to the government and be left with $310. So the main tax which is the biggest one you'll have to pay is what's called income tax. So what this income tax is that, let's just say you've got $100 that you make in your sales. So some of that money is given to the government, basically. I'm just trying to find it. So income tax here, that slide should actually be here. So let me just quickly adjust that. It was in the wrong spot. Okay, so income tax. So in Australia, this is how it works, okay? So you can earn up to $360 a week without having to pay any tax at all, okay? So if you're making $360 a week after your expenses that you've paid, you won't pay a cent to the government, okay? If you earn $360 to $712 a week, then you're going to pay 20.5%. So in other words, basically $1 in every 5. So if you, from 712 to 1540, you pay 34% of your money, and then it keeps going higher and higher, and when you get to the stage where you're making $3,600 a week, you'll be paying 47.5%. So it's pretty high. So let's just kind of take this slide and take some examples. So as an example under this, let's just say, so assume you make $1,000, okay? So how it works is first 360, 0, okay? Then from 360 to 712, you pay 20.5. So 712 So 712 less 360, that comes to, so 712 minus 360 is 352, okay? So 20.5 times 352 it comes to somewhere around about $72. Okay? Now from 712 to 1540 you pay 34%. So in this case it's $1,000, so is what we're going to be doing here. So it's basically 0.34 times 1,000 less 712 is 288. That will equal about $96, something like that. So the total tax you would pay is 96 plus 72 equals $168 in tax. Okay? So that gives you an idea of what you can change, which is of what you're going to end up paying. So that's a very simple example of how income tax works. Now, one thing I will mention here is when you've got a job, it seriously sucks because with a job, you can't do much about this. So if your income grows and you're making $10,000 a week or $20,000 a week, you're going to be paying a lot of tax. So to give you an idea, if you're making $10,000 a week, you'll be paying over $4,000 in taxes, income taxes alone. So you'll end up paying somewhere between $4,000 to $4,200 in taxes on that money. And that's not even including some of the other taxes I'm about to show you shortly. So you can see what I mean. By contrast, when you have a business, you can do things to make your tax lower. Like for example, you can give some money, like let's say you've got a, obviously you're young for this, but if one day you're married and have kids, you can give some money to them. And then of course, because you pay less tax with less money, you can give money to your husband or wife who makes less money than you. You also can set up these things called structures I'll be going on to a bit later, which can also be used to make your tax a little bit lower. You've got fringe benefits tax, which I won't go into. That's just to do with things you get benefits from your business. But GST, now what GST is, let me just explain GST. And I'll kind of use an example again. So, let's just say, as an example, that in your business, the rule is in GST is that if you make more than 75,000 per year, let's just get rid of this, you must register to pay GST. So in other words, you must register with the government to pay GST. So that's like 1,500 per week or something like that. So as an example, assume you make $2,000 per week in your business. You must charge an extra 10% on top, otherwise you pay 10% to the government. So I'll give you an example of what I mean by that. So with 2,000 per week, let's say you add GST of 10%, which is $200. So you now make 2,200 in sales, but you have to give the government $200. That's basically how it works. Otherwise, if you don't, you have to take it off the 2,000. So as well as paying income tax, you've got to take it off that. So it'll make you having less money. So you can see why I mean very quickly, but when you're making a lot of money, if you're not on top of this, you can end up paying 50% or more of your money in taxes to the government by the time you finish. So it's not hard to see that. Some other taxes you've got to deal with, which I won't spend too much time on today, but just to give you some idea, you pay petrol tax. So when you're driving mum and dad's car and they're paying to buy petrol so they can drive their car, or you've got a motorbike, if you've got a moped or see a motorbike, the government also takes the money. So when you pay like $1, for the fuel or $1 per litre, about 40% of that, so like 40 cents of that, gets paid to the government. Land tax means on the house that you live in with mum and dad, they have to pay taxes just for living in that house. If you smoke cigarettes, you're paying taxes as well every time you buy a packet of cigarette because they take some out. If you buy alcohol, there's some taxes being taken out as well. And if you buy like luxury, like really nice expensive cars or pretty jewelry or beautiful stuff, there's also tax being paid. So if you're kind of like, are you for real, like the government's just taking all the money, it's like, well, yeah, that's basically what's happening. So so basically, to give you a bit of an idea on how you work this out. So your total income, now, less expenses you're allowed to claim. In other words, if you've made $1,000, it doesn't mean that you pay tax on $1,000 because you can take off expenses which you have to pay to make your money. So as an example here, like you make $1,000 sales at the market, selling like at that, at say markets, but it costs you $400 to buy products. And let's just say it costs you $300 to buy products, $100 in things like fuel, buying a little table, buying some stuff, things like that. So you can reduce your amount from that, and you're left with $600 net profit. So these are terms you need to get used to, like net profit and income and things like that. So net profit means basically after all the money you brought in, less the money you spent, that's your net profit. And that's what you pay taxes on. And that's the critical figure for your business because that tells you how much you've really made. So it's great to make $1,000 sales, but the real question is always, what is your actual net profit? I mean, how much have you really made when you deduct all the expenses that you actually got to pay? So tax deductions, there's various things you can get tax deductions, which means expenses that you can take off your business. So here's to give you a little bit of an idea. Like for high income earners, that's how it works in different countries, how bad it is if you earn $100. So in Australia, if you earn $100, you're basically going to be left, you're going to pay $40 in tax, $40.70 in tax. So you're only going to be left with less than $60. That's for a high income earner in Australia. So that's income tax only, not even including GST, anything else. So that's why it's so important as you start making a lot of money that you have got someone working with you, but you're not going to be paying too much taxes. Now, questions I've been asked, for example, is like, what kind of income do you start making before tax becomes a problem? And basically, I say around $2,000 a week. If you're making $2,000 a week, then setting up structures and doing, things will not really kind of make much difference of all the costs. But if you're making over $2,000 per week and it's growing, that's the time when you've got to start looking at, should I do something about my taxes? Should I look into this and work out a way? So in the book Rich Dad Poor Dad, which I understand many of you have read, what he says is that rich people earn, they spend, and then pay tax. In other words, business owners earn, they spend their money on different things, then pay tax. As an example, being a business owner myself, I went to America last year, and a couple of times. And I went for business, but I also had some fun. Like I visited the Grand Canyon, I went to Las Vegas and had fun. I traveled around in mountains. I went down the Rocky Mountains in Colorado. A lot of that I was able to actually reduce my tax on because of that. I was actually able to pay less taxes and, get benefits out of that one. Whereas people who've got jobs and who are poor basically earn their money, then they pay tax, then they spend. So if you go and got a job tomorrow at Coles, earning, say, $500 a week or $400 a week, that's what happens to you. You will have some tax taken out of you, and then you get the leftover. That's how it works there, and there's not a heck of a lot you can do about it. So the philosophy of the rich and the poor is this. The rich invest their money and spend what is left. The poor spend their money and invest what is left. So the other thing I'd mention around taxes, it's important to plan your money as it's coming in as well. So you need to kind of be budgeting and doing stuff with it, because otherwise the reason why most people end up having to get jobs or fail, or their businesses don't make any money for them or don't work out, is because they just spend everything and don't realise they've got taxes to pay, and they're not investing their money and putting it aside or building any savings or anything like that. So the good news is you can lower taxes. It's one of the things I do. So you can set up these wonderful little babies called family trusts, companies, foundations, and things like that. So rich people use these very successfully to lower their taxes. And to give you an example, I've just finished setting up someone right now over in Hong Kong and Singapore. And what it will mean now is, because they're going to be travelling and mainly living overseas, their income tax they were paying formerly was they were paying like every $1,000 they made, they'd have to pay about $400. They're now paying, I think, $50, like out of $1,000, like 5% by us doing it for them. Even in Australia, you can end up paying as high as like 50%, as I mentioned, 40 to 50%. But by using these, you can at least keep taxes around the 25-30% mark and keep it a little bit lower. So, like I said, until you're making $2,000 a week, it's not going to affect you enough. So, what are the kind of things that you must do? And I've made this presentation relatively short because I want to open this up for questions, because I'm sure you have many questions for me. But here's a few tips to get started so you're doing your business right from day one. Because ultimately, don't kind of think, oh, it doesn't matter for me now. I'm assuming that you want to do this business and make really good money. And I've told my own kids, I said, guys, you have the opportunity of a lifetime being part of this course with Ben, Sherry and Andrew. I mean, this is just a remarkable opportunity. You can learn how to build a business and then I can show you how to invest. And you guys, there's no reason why you guys can't be age 25 and never have to work again for the rest of your life if you don't want to, because you can make money from your business and you can save it and you can invest it into things. Like you can invest in various things, like you can invest in somebody else's business. So for example, let's just say that I have a business and I need to borrow, like someone recently needed $100,000 urgently. So I gave him $50,000 of that money, and he's going to be giving me back double the money. Someone I know is trustworthy. So in 4 months' time, I'll be doubling my money. That's an example. So my $50,000 will become $100,000 in 4 months. And there's many kind of investments like that if you know what you're doing. So here's some tips to get started. So number one, keep records, okay? So what I mean is don't just receive money and don't know. Actually, keep a spreadsheet like on what you make. So as an example here, so make it like here's an example of a budget, like for example what I do here. So I have a budget here. I actually have amounts that I'm getting, cash that I'm coming in. I estimate it. I record everything I get, and then I include my expenses. So I'm always knowing what's coming in. I can estimate my money, and I can see what I need to spend. Because in other words, if you don't, I need to know, because you'll find when you're running a business, you'll need money to invest back in. Like with my own kids, like, William with his card tricks and with Edward, they're pretty excited about it. But now what they want to do is bring in another idea which Andrew gave them, where they buy some tricks, magic tricks, and sell magic bags as part of their act. So they're going to need some money to do that. So they're going to invest some of their money back into their business. So they're going to take some of their $200 they've made this week, and they're going to use that to buy some products and sell it. So they know then how much money they need. So a budget helps you work out how much you need and where you're short. So, this is a sample budget I'm giving you, a sample budget which I kind of got made up figures or something, which then shows you everything. It shows how much expenses and then shows how much at the end that you might have. So that's an example for you. So keeping good records, only got your money you make and what you spend, because, so William, for example, and even some of the other examples, it's great, like, the clerks who made 405 on the market, God, that's just well done. That's just, awesome stuff. So, you want to be beating your record every time, like you want to be getting better amounts each time. And I told this to William, so he wants to crack the $100 mark next time, and then of course it'll keep going higher and find ways to keep growing and making your income go higher and higher and higher. So have a budget. Also have a good savings plan, a tax plan. So spend some money, save some money, give some money to help others, or I would say invest or give. Give a bit, invest a bit back into your business, and you've got some tax to pay as you're growing. So here's a little example of something you might want to do. And your figures you might make up yourself are like a minimum 10% should go into savings. And in fact, if you're not having much expenses you've got to pay, you can put more into savings. Money which you start saving, so you've got money aside, so you can invest it and have some cash to do things like if it's fun, holidays, or whatever. 20% should be put aside for tax at a minimum. In fact, as you get bigger and bigger, that figure goes up to 30%, but for now, 20%. 25 to 30% pay back debt or invest back into your business, and 40 to 45% live off and have fun with. That's an example that you might do for your business, because you've always got to reward yourself. You've always got to invest and keep growing your business, and you want to save for yourself. The savings is very important as part of building, because you'll never be rich from your business if you don't save money. So example, Roger 13 makes $1,000 in sales in 4 weeks in his business. So Roger puts $100,000 into a savings account, so $100 into a savings account, $200 into his tax account, and in this case, because he's made less than $360 a week, he probably won't pay any tax. So in this case, Roger should put all of that in the savings. So Because he's not paying the taxes, he's now got some savings. So it's $300 for savings. He then might pay $300 to pay back his dad for his loan to buy products. And it's important to be responsible in your businesses. Like if your parents are obviously funding and helping you out, you want to become self-independent. So you want to be able to pay. Like with my kids, you know, when William bought his table and bought his stuff, he has to pay every single cent, you know. And I also take 10% of what he makes, and that's basically used to cover expenses. And the reason I do that is, as I told him and Edwin, is because this is kind of teaching the reality of overheads. So that covers the fact that he gets driven down to markets and we do little things, and obviously I don't make my money back fully on that. But there's that overhead there. So $300 to pay back his dad for his loan, $400 he uses to have fun with. So that's an example. And obviously you can play around with those figures, but the main thing is to have a bit of a plan and be putting aside for taxes and get into that habit now. And if you've got no taxes to pay, then great, put that into savings and invest it in your business and grow faster until the day comes when you've got some tax to pay. And at that point in time, then that's when you're going to have to lodge a tax return and do things like that and go down and get a tax file number. And if you're 15 and you're making, you know, $2,000 a week and you're paying some taxes, well, yeah, you know, the main thing is that we can look at ways to make it lower for you, but it can be a really good thing because it's like, hey, I'm in the real world now. So financial statements, I want to quickly just, before I take questions, this just means that if you've read Robert Kiyosaki's Rich Dad, Poor Dad, or whatever, he's got other books. You want to understand financial statements if you're running a business. So this is one word you want to understand. You want to know what a balance sheet is and a profit and loss statement is. So a profit and loss statement in simple terms is just what I showed you before. It's something where you work out how much money you've made, how much you spent, and what's your net profit at the end. That's a profit and loss. So this way you know if your profit is going up. Every month in my business, I know what my profit I'm making in. And in fact, I go by my every 3 months. Every 3 months, I analyse my figures and ask myself, am I going up in my profit or am I going down? And if I'm going down, then I've got to ask myself why. So it's like if your sales start dropping from the markets or whatever else, you have to ask yourself, why are my sales dropping? And that gives you a chance to review and make sure you're doing it all properly and you haven't sort of dropped off your discipline in business. And believe me, from someone who's run a business for years, I make a lot of money from my business now. I do very well from it. There was a time when I didn't know this kind of stuff. And because, like I said, I'd been used to being an employee, and I found running a business overwhelming because I had a job before, and my first 2 businesses actually failed. You know, I actually lost money out of them and ended up, like at one stage 7 or 8 years ago, I had literally no money at all. And having, like, at that time, 3 children or 4 children, it was rather challenging time of my life. It was not easy. And I've learned all these things now and done and now doing well in business. So you can do very well and build a great life for yourself if you get into these good habits, and certainly from day one, start preparing for your taxes and for the fact that you're going to, as you make more and more money, you're going to have to start lodging returns. So now I want to open it up for questions and say, please, feel free to ask any questions that you would like to ask.
Okay, guys, so if you've got any questions at all, now's the time to chat them into the chat box, and we'll ask Warren as they come through. So there's one here, Warren, that's Lisa and Will have asked, which says, do you need to get the money, so do you get the money you paid the government back? So the money you pay in taxes, do you get that back? And how does that work?
No, you don't. You only get that money back if you've got a job, and because let's say you've got a job like working at Coles, then Coles have to take some of your money off you and give it to the government for tax. So Coles take it off you, and you've got no choice. So you might be getting paid $500, but you only get to say $400. And at the end of the year, you lodge your tax return with the government, and if Coles have taken out more money than they should have from you, then the government will give you back a refund for the amount of tax you should have paid compared to the amount of tax that was actually taken out. But so the short answer is no, you only get it back if you paid too much. That's it.
Okay, cool. All right, there's another one here. A few coming in now, Warren. Next one is from Lisa again. Should we use our business under our parents? Should we use our business under our parents at this stage? Or I think the question should be, or should we start our own?
It depends. It depends on what you're actually making, really. So that's not an easy question. It depends on your business. Like, what business, Lisa, are you doing? Like, what business is Lisa doing?
So Lisa does, so there's a few more things there. Parents' business, is that correct? We'll be turning over 150K and they do importing things from China.
Oh, okay. So, yeah, I mean, it's one option is just to be doing it under the parents' business is one option. If you're going to be, if you're making that kind of money, you may want to consider setting up your own business separate from your parents completely. So you've got two choices. If you're not making a lot of money, then initially you might just do it under your parents. I'm encouraging my kids to kind of go their own way and really go their own way completely. That's my desire with them. That's part of becoming mature and responsible. So I think it depends on what you're doing exactly. Like if you're importing and let's say you've got to get licenses and you've got to get all kinds of stuff, then you may have to do it under your parents. So if you've got licenses, things like that.
Okay, there's another one. Thanks, Warren. There's another one here from, let me just keep on top of this. Oh,
Edward says, how old do you have to be to pay tax?
cool.
Unfortunately, Edward, basically once you've got a business and you're making money, you're old enough to pay taxes. It's as simple as that. The government will take off you, if you're 1 year old and you're running a business lying in your crib, you know, they'll take money off you.
At least they're consistent.
Oh, yeah.
All right, so there's another one here. When do your children start paying tax? I think you answered that one. Just wondering if we could go to back to the slide that shows the 10% savings, the 20% tax to the account, and payback debt. We missed writing that all down. So I think it was the breakdown of costs.
There it is.
Yep.
I'm happy to give a copy of the slides too, if you are, you know, Ben, because I know that there's a few people have mentioned here that like the slides, so I don't have any objection.
Okay, cool. Thanks. Thanks for that, Warren. So I'll put the slides up for a PDF, guys, on the website. They'll go up in the next couple of days. Also the recording, so you can come back and watch any of the questions or anything that you need to have an ask.
Caitlin asked, what type of business you have make a difference in how much tax you pay? Yeah, I'd say yes, Caitlin, because let's say you've got an overseas business and it's all overseas, and you're making all your money online from overseas people. Some things can be done to make your tax lower, and if you're making a lot of money, you can even look at moving your business overseas, for example. But if your business is not like that, then basically, no, you're going to be pretty much paying the same tax whenever your business is going. So generally, if it's an overseas business, you might pay a lot less. If it's an Australian-based business, you will pay a lot more. You'll sort of be paying normal taxes.
Okay. Can't see too many other questions. If anyone else has got any other questions, please type them in.
Yeah, please type them in. You know, happy to answer them.
I think Lee's asking, what would warrant an overseas business, Warren?
Yeah, good question. It would. That's okay, Caitlin. Thank you for that. Lee, what would warrant an overseas business? Basically, you'd need to be making at least say $250,000, $300,000 a year, which is like in net profits, not just sales, net profit. So, you know, like that's as a rule. So somewhere around that, $250,000 to $300,000, maybe $200,000 at a stretch, but more like that, which is like $20,000 to $25,000 a a month in net profit, and you have to also have an entirely overseas kind of, clientele or customers, because the way Australian tax law works is if you live in Australia, they say we want all your money and you've got to pay tax on it. So if you've got an overseas business even, they say, well, you live in Australia, we still want your money, even though it's overseas. But you can set up a company which meets certain rules, which can pay a lot less tax if you know how to do it. And that's kind of what I do for people. So Robin asked, what is your top-up tip for kids to manage money that they're starting to make? Yeah, good question, Robin. My top tip really is from day one to manage their money and get into the right habits. It's a bit like, the kids that go out and do athletics and run around and do all that kind of stuff are going to be much healthier and better off than the kids who sit there all day playing the iPads and never go outside. And likewise, when you're making money, you want to be keeping spreadsheets and keeping on tab of how much you're making and following those disciplines I gave you, like managing your money. There's a very good book by a guy called Noel Whittaker on money, who's a finance guy, and he shows that if you're 15 or 19 and you just saved $1 a day for the rest of your life and only made 5% of your money, you'd have millions of dollars by the time you're 65, like millions and millions. So the number one habit is just to save money and keep saving all the time. And don't touch your savings. My number one tip is save and don't touch it. And make sure you be balanced with your money. Spend some and have fun, but also save money, invest money, save it. And then once you've got enough, and you save enough until you've got enough money in your bank where even if you didn't do your business or do anything at all, for 6 months you have enough money to do what you wanted. Then after that, any money you save after that, you can start investing that to buy houses, to buy, invest it, whatever, that kind of stuff. That's my number one tip. Neil says, all personal expenses that can be amalgamated and become business expenses. Not quite sure, but, oh yeah, no, okay Neil. So yeah, so basically, if you've got some personal expenses, so in other words, if you, like say, have a phone, like as an example, my mobile phone, I pay Telstra $130 per month, and I get unlimited calls on that, and text. And of course, some of my calls are private, like, I ring my friends, and I ring my neighbours, or I, ring whoever, but a lot of them are for business. Because of the fact that I have to pay the same price regardless of what I make, I can all of that, take it off my money for my business and pay less tax. Take all of it off.
Okay.
So Alana would like you to explain the rich earn, spend, pay tax and the poor earn, tax, spend. Okay, that's a good one. So best to do an example. I think it's probably the best. So let's just go first, so example one. So we're going to look at example one, Paul. So, Davey works at a supermarket and on night shift. Actually, no, we'll use a better example. Davey works on the mines in the countryside. It's very hot and yucky, but he makes really good money. Okay? So Davey gets, let's say, $20,000 per month or $240,000 per year, and it's very possible for you to make that kind of money. So you think, oh wow, that's really great, wow, awesome. However, because Davey works for a boss, the boss will take out tax for him. So boss takes out, let's say, it'd be around about almost 40% on that. So let's say boss takes out $90,000 tax. Davey only has 150,000 left, or basically that's like 12,500 per month. And that's quite big, because let's assume that Davey has a mortgage which he pays, like he has a mortgage which he's got to pay, like say $3,000 per month. And then he also has to pay, he's got 4 kids. Before he knows it, his money will go really fast. Now, let's look at another example. So example 2 is Rich, okay? So Jenny runs a business selling products online all over the world. Jenny also gets 20,000 per month or 240,000 per year in net profit, okay? However, so Jenny, let's say, spends $100,000 on various overseas trips, phone and tax write-offs. In other words, ways to cut her tax down, which business owners are allowed to do, okay? So Jenny now has $140,000 left. Tax is worked out on the $140,000 and would be about $40,000. Jenny is left with $100,000. So what's Jenny left with at the end? So Jenny, sorry about this. So Jenny is actually, so what's Jenny left with? Sorry. So she took various write-offs and that kind of stuff. So she only paid $40,000 tax. She pays $40,000 tax. So Jenny is left with $250,000 less $40,000 equals $210,000. So the difference between Davey and Jenny, Davey has got only $150,000 left. That's all he's got left. Jenny has got $210,000 left. And let's go one step further even. If Jenny can somehow set it all up overseas, she may pay 0 tax, or somewhere close to 0. So does that answer the question?
Yeah, that was a great example. Well done, Warren, putting all that in a couple of slides.
Thanks, Lisa. Thanks, Lee. Anyone else got any exciting questions or anything like that, or want any tips or stuff like that?
So guys, now's probably the time to ask Warren if you have anything in particular. Big shout out to Warren for joining us tonight. We really appreciate it. So I think that's about it as far as the questions.
Warren.
Oh, Andrew?
Warren.
Hi, Andrew.
Hey, can you maybe just touch on why sometimes when you're an employee, in the example you just given us, Jenny was able to deduct a whole lot of money from her income because she spent it on her business. Sometimes when you're an employee, you don't get to deduct much money. Can you just maybe in a simple way explain why employees don't get to deduct things as much as people who own businesses do?
Oh, it's basically because the tax laws are set up in a way they're very, very favourable to people who run businesses. So when you run a business, for example, it's much easier to, like you've got the money coming into your hands and no tax is taken out until you basically pay it to the tax office. Whereas when you've got a job, working at Coles take your tax out of you before you can do it. And there's very, very few deductions or write-offs you can do as a job owner. So if you've got a job there's very few things you can, claim against it. So, if you basically do like your haircut or if you drive your car, all that is considered a private expense. So in other words, it's a personal expense. Whereas with a business owner, the line between what's personal and what's business can be quite grey. So as a simple example, there's a court case that held that a truck driver, running a business could claim sunglasses and write that off as tax. If you say that's one very good example. Another good example is if you travel overseas for business, like I did to America, the law clearly shows that I can claim 100% of all my air flight costs, my plane costs, even if I'm going to do a holiday as well. I'm not allowed to do that. With my day-to-day, travel, I can only claim the business part. But that said, let's just say that I go there and I do a few days holiday, but on say a couple of days of my holiday, I'm actually seeing clients as well when I'm there. Then that can arguably become business as well. So there's a lot of grey areas of a business owner, Andrew, that they can do. A lot of grey areas.
So that only makes, and people go, oh, that's unfair. I hear people say, oh, that's unfair. It gives the business people an advantage. Well, it may very well do, but what you've got to think about is if they're spending money to try and make money, say they bring in $100,000, it might have cost them $40,000 to produce that $100,000. So it wouldn't be fair to tax them on $100,000 because they really haven't got that $100,000 left. They had to spend it to make it, sort of thing. So they're really the thinking is that there's only the $60,000 is what they've earned. That's the profit that they make. So they're getting taxed on profit. And when they call it, what they call that post, well, what's the word for that? Taxable income, basically. That becomes taxable income at that point. It's after they've deducted the actual cost of getting that money in. So now what that means, I think, is that the tax department doesn't treat everybody equally. Is that correct in terms of what they can deduct and what they can't? Is that a fair statement?
Yeah, that's a pretty fair statement.
So probably one of the points to learn here is that is to position yourself in a business is a great way to be able to take advantage of all the laws, the rules of the game, and the tax laws are really the rules of the game in this sense. So it pays to know the rules of the game when you're playing it, and that's why I like hanging around you because you know the rules of the game real well, and you're able to advise us and let us know. So that's pretty interesting.
Excellent. No, thank you, Andrew. Yeah, no, I like hanging around you too. So I told my kids that when they said that you gave them some suggestions, I said anything that guy says, listen to him. I've learned a lot from him.
Thank you. So back to you, Ben.
Cool. So there's a few more questions that have just jumped in here. If you can see them, Warren, do you want me to read them out or do you want to go through them?
I'll let you go through them. Can I set up LLCs in America from Lisa? Short answer is yes. I know the context I can help you do it with.
What's an LLC?
A limited liability company. That's a special type of company in America. So, which country would the business have to be for zero tax? From Lee? There's a few, Lee. It kind of depends on your situations. Like, there's many countries that charge 0% tax, but they're very much on the government's radar. Governments don't like them, like Seychelles and the Virgin Islands and Caymans and all that. So I tend to more focus on places like Hong Kong and Singapore, where there is tax payable, but if you know how to use their laws properly, you won't pay tax. So Hong Kong, for example, you just have to make sure that your income is not based in Hong Kong. And then you don't pay the tax in Hong Kong. That's an example. Nick asks, are you saying that Jenny can spend 100K on herself but claim this through the business? Yes and no, Nick. Like, it's how you categorize things. It's a bit like, when I'll give you an example. Let's just say that your parents say, okay, did you eat the chocolate cake? And then your response to that is, I saw my brother eating chocolate cake yesterday. So you never actually answer the question, but you just say, oh, I saw my brother eat chocolate cake yesterday, and the mum goes, oh gosh, I knew he did it. So you never actually lied, but you kind of just never told the truth either. You never actually answered the question. So in other words, what I'm saying, it's all about how you categorize things and how you make things appear. So like the example on the trip to America, like you can go on a trip to America and there's a personal component as well as business, but you can often make the personal component become business. A great example was many years ago, I had a client who went on a trip to Antarctica on a boat, and the tax office were looking at it and saying, we don't think you should be able to claim this. And I said to them, I said, well, basically, though, he went there to learn about business, because if you read the brochure here, he was learning they did a seminar on the boat teaching them how to actually increase their income and make more money. And that was the truth. So they said, oh, fine, and they let him actually claim it. Another accountant said, in the same situation, on the same trip, goes, oh yeah, they went there to be motivated and inspired and to basically really learn about the mindset to be a great business owner. Now, of course, mindset and being happy and inspired, the tax office say that's just personal stuff. So, the tax office didn't allow their claim for the exact same trip. So everything is how you make things appear. Robin asks for my top tip for setting up kids' bank accounts for their business. I don't really know if I have one, Robin, to be completely honest with you. I just went down to Commonwealth Bank for my kids and opened an account with them, and they usually have a special, accounts for kids which give extra interest rates. So that's all I did. I just went to the Commonwealth Bank and opened one for them. So I can't say I'm an expert in that, unfortunately. So the kids get to use their money to go to America and VidCon and Disneyland before they pay any tax. Well, yeah, if you play this one properly, you're going to Disneyland to learn about business and things like that, you probably could claim, and then you go there and you're running some little workshops there and learning, then yeah, you could probably claim some of it before you pay tax. That is correct. So it's knowing how to use the system. It's being smart.
Okay, I think that's all the questions that are coming in. Last chance, guys, to type in any questions. So just if I can cut in here, guys, a lot of what Warren's saying is some similar things that we've been trying to teach you guys. So if we go back and remember some of the lessons from The Richest Man in Babylon about saving your 10% and investing it, that was a big lesson from that book. And of course, we ask you guys to send through your monthly numbers on your income statements or your profit and loss statements, and we can go over with you at the beginning of every month. So guys, can't stress the getting the profit and loss statements into us every month. We did a whole webinar on how to do that. If you can get them through at the beginning of every month, we can sit down and go through your numbers. And then once we've got that under control, we can start talking about things like cash flow and things like that a little bit later.
Yeah, no, I just want to butt in there, Ben. I'll totally back you up on that. I mean, because in my business as an accountant where I help people with money, if the tax office look at your business, the first thing they look at is if you've got good statements and if you've got good profit and loss. So, I mean, that's to me is one of the most important parts. If you don't know how much money you're making and what you're spending, for all you know, you're not actually making any money. And I was even showing William, with his money he made from busking, I said, right now we're giving you a startup, but, you would have expenses to do with getting here, expenses with buying tables, tax expenses, all kinds of stuff. So it's very important that you do that to keep a handle on what you're making and know if you've got to find a way to make more money or cut your expenses off a bit. I'll give you the screen back if you want, Ben.
Yeah, okay, yep. Okay, so we're getting a whole bunch of people saying thanks. It's all coming through loud and clear. So I think Lee's asking for contact information, Warren. Are you happy I can pass Lee's details on to you if you like, or how do you want to manage that?
Yeah, my email. I'm just my email. I'll just put it in, I'll just type it into the chat. So you've got access to my email. That's probably the best way to get me. If you try and ring me, you've got no chance. But if you email me, you can get me on that one.
Okay. Cool.
So I put it in my chat.
Excellent. Thank you very much. So I think that's pretty much it for tonight. Thank you again, Warren. I really appreciated you being on the call and putting it all together for us. You've done an amazing job. I think a lot of people have learned a lot of things from tax to managing finances to a whole bunch of really good things. We really thank you for opening the kids' eyes and being able to share that with them. It means a lot to us. So thank you very much.
My pleasure.
And yeah, guys, I think that's about it. We'll probably wrap it up tonight and we'll touch base with you guys on a call sometime very soon.
Excellent.
Cool. All right. Thanks, guys. We'll chat with you then.
Thanks very much, everybody. Good stuff, Warren. Well done.
My pleasure.